morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures. Happy Friday to everybody. We're here to talk to you about the grain markets. Okay, we'll start with the corn market. So we had the USDA October report yesterday morning. Always a high-risk report in October, and it was a bearish report. By that I mean the carry-out numbers were bigger than the month before. But again, more than what these reports say is how the market responds to these reports. So we have higher prices in corn and beans and a little bit of a follow through here this morning. Like I mentioned, it's just the time of the year now for corn and soybeans to try to rally. Our big production, our big harvest, the yields are all worked into the price of corn and soybeans. Now the market is left to focus on demand, which is very stout in the corn market and lagging behind in soybean and wheat. Here's our first chart of corn today. See if you can see the cupping formation in the corn market and also perhaps a potential head and shoulders bullish chart pattern. So the market looks good here in corn. Keep in mind last year corn bottomed in mid-December and rallied 70 cents till the end of May. So many times markets rhyme and repeat. So it's the time of year for the corn market to rally. First resistance is about $3.90, 20 cents higher from here. So I am looking for perhaps a 30, 40, 50 cent rally in corn going into the end of the year. Demand is very good. I hope it continues. It kind of seems like it will. Everything's hitting on all cylinders but the ethanol, and whether you agree with ethanol or not, it does clear up the smog in the major cities of our world, Shanghai, New York, Chicago, London, and that's real positive for the environment and hence a big demand story for our U.S. corn. Okay, the soybean market, same kind of thing yesterday, kind of a bearish report, but the market rallies here. So it's just the time of year for soybeans to rally. I'm looking for this $9, $9.20 level, and then we really got our work cut out for us. There's a lot of soybeans in the world. And certainly Brazil off to a very good start. They're going to have gigantic soybean acres here in 2019. They're about 20% planted already, which is about twice the average. So these trade wars with China and how it's disrupting our food chain here, you're seeing China and India. India's exports to China has increased 52% year on year. So as China goes and sources food from other places, you can see this happening with India. Soybean meal is the key here. You've got record soybean meal prices in China. Now, is that good for the 400 million pigs that are in China? Probably not. And you're going to see this diet for their pigs in China change here as they try to source soybean meal from other locations. Okay, and then the wheat market here. Nothing, Australia, USDA and Australia numbers yesterday, they weren't increased. Keep in mind, Australia had the driest September on record. I think the one bullish story that we've got here going forward is the strength and the dynamics in the corn market can help wheat trade higher. So it's October now. Demand is stout. Markets are going to focus on demand, and it's very good. And I'm looking for higher prices as we move into the end of the year. Everybody have an excellent weekend.